What's up, everybody? Thursday, April 30th, end of the month. And the stock market ended on a kind of a sour note today, but it had a good month. It had a very good month. I think this was the best month since 1987. So here's what's going on. We had the ECB meeting earlier today, and basically they just kept rates unchanged and they lowered capital requirements for the banks. Surprisingly, we saw a pretty good rally in the euro. The dollar, the US dollar, was generally weak today. We had another 3.8 million of initial claims for unemployment insurance, and that hit the dollar. So we're starting to see the market react to, at least when I'm talking about the Forex market, we're starting to see the Forex market react to negative data with respect to the US economy. They are selling the dollar. Up until now, recently, or I should say up until now, the dollar's been able to brush off the negative data. I will say this, however. In today's Fed release, every Thursday, you know, they come out with their balance sheet. It's the H.4.1 release, if you want to look it up. Central bank liquidity swaps. Those are the Forex swaps that the Fed offers to other central banks if, you know, they're short dollars. That increased again by 29 billion. So we've had, what, 6 weeks in a row, maybe more, maybe 8 weeks in a row of increases, and 29 billion. That was down a little bit from last week. I think the prior week was 32 billion, but that's still an elevated number. So this dollar shortage situation, whatever you want to call it, I mean, it still seems to be lingering. So I wouldn't write the dollar off yet completely. Longer term, you know my point of view, the dollar is going down. However, whatever this shortage situation is, there still seems to be some tightness there. We had a 29 billion increase in those swap lines since last week, and that is, you know, that's still an elevated number. I want to talk about sentiment right now. You know, every week I do an analysis of the AAII Weekly Sentiment Survey. That's the American Association of Individual Investors. You could look that up online. It's AAII.org, I believe it is. If you just Google that, you could see it. They do a very nice weekly sentiment survey. Bullish sentiment is still low. Bearish sentiment is still high. Neutral sentiment is low. So bullish sentiment is well below the historical average. Bearish sentiment is still well above the historical average. Neutral sentiment is well below the historical average. And, you know, my reading of this is the market's going to go higher. We closed on a weak note today. It's a correction from the run-up that we had over the past 2 days. No big deal. But sentiment, it's striking to me that sentiment is still so negative. I mean, people really, really want to embrace the negative outlook, and I could understand that. I mean, that is understandable given the pandemic and the coronavirus pandemic, etc. Economies are opening up here in the United States. Most states are going to be open by this weekend. I think something like 31 or 40 states are going to be open by this weekend. Now, that's a gradual opening. That's not a full blast opening, but we are moving in that direction to a reopening of the economy. Let me talk about the fiscal, because you know that is the core of my analysis. We are now 650 billion spending, I'm talking about 650 billion above where we were at this time last year. And again, this time last year was an all-time record high in spending. We are now 650 billion above that. And just to give you some perspective on this, last year at this time, we were up 180 billion over the previous year. So that's more than 3 times the increase that we saw last year. We're now 650 billion above where we were last year. Another 22 billion in stimulus checks went out yesterday. That was in the daily treasury statement. Unemployment benefits now 63 billion so far for the fiscal year. That is up 45 billion, and all this ramped up in a month. We're up 45 billion over last year where we were. 63 billion total in unemployment benefits, and that's going out at an average of almost 5 billion a day, 4 to 5 billion a day. So that's very powerful. So the fiscal is there at a very high level, and there's still, let me say this, there's still a lot in the pipeline. There's a lot in the pipeline. So the market pullback today, and also in after hours, as I'm making this video, it is down some more. That's a correction of the advance we have had over the last couple of days. I want to make a mention of Tesla. Okay, it had excellent earnings last night. The stock was up almost $100. I think I mentioned that the stock was up almost $100. It pulled back today and actually closed down on the day on comments from this hedge fund guy, David Einhorn. I don't know if you know anything about this guy or if you follow this guy, but let me just say this. This guy has a terrible, terrible track record. Awful track. Like, I don't know. It's amazing to me how people give guys like him money to manage. I mean, the guy has never beaten the S&P. In 2018, he had something like a 34% loss or something crazy like that. He always lags the S&P. The guy has a terrible, terrible... Who gives these people money to manage? I'm just like... I can't understand it. I can't understand it. It must be like a club, and if you're in the club with these hedge fund guys, they're probably all out in the Hamptons in Long Island. If you're in this club with these hedge fund guys, they all manage to hook into the institutional money somehow. But it's just, I mean, it's beside me how these guys like Einhorn end up getting any money to manage. I can't believe it. So to me, this is a fantastic fade. All right? Einhorn talks negative about Tesla. What happens? The zombies, the sheep, they sell the stock, it goes down. Tesla's turning a profit. You know, this reminds me a lot of Amazon, when for a long time Amazon was losing money, losing money, losing money. And I was one of those people way back saying that stock is losing money. Then, you know, it had a ridiculous, when it finally started to make a little bit of money, it had a ridiculous PE, like a 300 PE, and I'm saying that's no good. And the stock at that time was 275 bucks. Look at where it went to. Over 2,000 bucks. Tesla may not go to 2,000, but it's going to go over 1,000. It's probably a $1,200 to a $1,500 stock. Sales are booming. China's sales are very strong despite coronavirus. And this guy Einhorn, to me, is a fantastic. Anytime you have a chance to fade a guy like this with a terrible track record, I mean, personally, wild horses wouldn't keep me from fading whatever that guy's doing. All right. How he gets his money, that's another story. I give him a lot of credit for that, and I give a lot of these guys credit if they have one attribute, which is certainly not trading, and it's certainly not the understanding of the monetary system. If they have one attribute, it is their ability to get money from people. That I find to be amazing. That's really something. So Tesla on this pullback, I am definitely recommending a buy. I own the stock personally, as a disclosure, just to let you know. So that's about two other things. One, gold, 1670 remains the support. Silver today put out a recommendation at 14 Yeah, 14.95 down to 14.70. That's a buy area. I think it popped back up over 15 bucks. So we got long silver for the first time in a long time. So that's it. That's it for today. Remember, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Some of you have been doing that. That's very good. I commend you for that. You're going to learn a lot. All right, everybody. See you tomorrow. Bye-bye.